The only competitive advantage is trust and how you win customers' trust. But if you're a company, you've joined an early stage company, you don't have liquidity windows, you can't wait for 15 years. True. Life happens in 15 years for an employee, and therefore you need to create liquidity windows for both employees, investors even. A 15-year window is beyond investment cycles, which are typically 8 to 10 years.
So are you more founder aligned, founder centric, or are you more employee centric?
We don't tend to think of this as a founder or the employees. We tend to think of the business as the customer. The business succeeds, all the stakeholders in the business succeed. So our client is the company. It's not a founder, it's not the employees. So we feel the largest distributed wealth creation will happen from ownership of companies, and that's what we are solving for. And that's the big vision. And then you start somewhere, and that was employee cap table management, ESOP management, broadly equity management.
Is AI a friend or an enemy for you? How do you see AI?
Every software, there won't be a standalone software company. It will have to be AI native to survive, let's say, the next decade or the next couple of decades.
What will be your one resounding message to founders?
Our mission is unlocking the power of ownership, which means ownership has to be transparent, it has to be fair, and it has to make a meaningful difference when the outcomes are right. So we've already, for the US market, where we are a small entrant in whatsoever, we've already partnered with a large globally top 10 financial institution who also led our last round. We are working on partnerships in the Indian market as well. Like I said, today's ESOP holder is tomorrow's brokerage customer.
Hello and a very warm welcome to everybody. You are watching Made with Endiya. Today with me is a very interesting entrepreneur. We have always heard about founders building companies. But have we ever thought about what gives the sense of ownership to employees who really toil hard and stay till the end of the organizations to make them really big? Here's a visionary entrepreneur with me. He actually sought through the problem and saw that employees should be given their due in terms of how much they bring to the table. So they basically went about unlocking the power of ownership. Before I introduce you to Ravi, who is the CEO and co-founder of Qapita, and tell you more about the organization, it is my sheer pleasure and privilege to welcome you, Ravi, on this podcast. And the next 45 minutes that I have with you, we'll talk about Qapita's journey from three particular lenses, essentially product, technology, and your growth levers. Thank you so much.
Thank you, Shrija. Thanks for having me on Made with Endiya. It's a privilege. Looking forward to this conversation.
Thank you so much, Ravi. And I really enjoyed our time. We're just chatting off the camera right now, getting to know more about you and Qapita journey in particular. When you started, and it was essentially a cap management platform, correct me if I'm wrong here, and then you evolved into a full-grown platform right now. So what really was it? That did you kept listening to your customers, and did that feedback escalate back into the product? Tell us more about your journey of evolution.
See, I generally believe when you start, you are in a startup, you want a venture investable startup. The vision has to be very big, scalable, long-term, and change something meaningfully in the world. So there's the vision bit. And then you're a startup with a small team, you have very few people, you have very limited resources, and you still have to solve a problem. So you always start with one thing. So the one thing we started with was cap table management. And cap table management very quickly evolved into equity management, and I'll talk a bit about that. But then, where did this go? How does this become a large, enduring business? What's the grand vision? There was that bit, which was much broader than solving just this cap table management bit. So initially, we started with cap table management, which was like we help build a software where people can put their cap tables. But we found that the product market fit was much bigger, better once we added the employee bit into it. Because the cap table management, had its limitations in this part of the world because this final system of record is ROC or ACRA in Singapore, ROC in India, and so on. Whereas on equity management, when you add the employee bit into it, there was no system of record. So whatever we would build would eventually become the system of record for managing ownership of a company. So we started there, and then there was the big vision: as we build this company, how will it change the world? What is the impact we'll create? And that's where the broader vision of private markets, the broader sense of what ownership means, how people become owners. And we keep saying this, we think the largest distributed wealth creation in any growing economy and India included, one of the largest, fastest growing economies, will be with equity ownership. And equity ownership, when you say it sounds like it is founders and entrepreneurs, but actually every employee today of a fast growing tech startup is already an owner, and that is spilling into the mainstream. So we feel the largest distributed wealth creation will happen from ownership of companies, and that's what we are solving for. And that's the big vision. And then you start somewhere, and that was employee cap table management, ESOP management, broadly equity management.
Thanks for that, Ravi. And I'm just trying to sort of paint a picture here, a more practical picture of what Qapita really does. So if I'm a founder of, say, a startup, Series A level, not necessarily do I need Qapita services then, or do I need Qapita when I'm, say, at a Series C level? What is it?
The earlier, the better. I think the problems that not addressed early on tends to compound, and then you tend to solve a larger problem. So today we offer this to almost any company that's just started, and we can continue to support them all the way into a listing post IPO. So stage of the company doesn't matter. We scale with the stage of the company, and we have different offerings. The platform is the same. The technology platform is the same. How you would use the technology platform, what's relevant for you, changes as you scale. So newly minted startup, I think as soon as you have enough records, almost any VC term sheet tends to come with creation of an ESOP pool these days. So that's almost a trigger point, but you don't have to wait for that. You can start as early, and it's a freemium model. So you can start on a free plan, then you can go to a minimally paid version, and then as you scale. There tend to be 2 or 3 inflection points. First one is, or step changes in how you use the platform. First one tends to be when you raise the first round of funding. The second one tends to be when you cross 25 to 50 employees. The third one tends to be when you have scaled to 400 employees or 300 to 400 employees. We are starting to think about different types of incentives, performance-based plans, how it's impacting your accounting, how it's impacting your reporting, and so on. So the problem intensity tends to change with scale, but you can use the platform at all stages.
Great. So I think I want to sort of dwell deeper into this. So are you more founder aligned, founder centric, or are you more employee centric? So are you working with more HR practices of firms? So is this being used as a tool to retain talent, to attract talent, or just as a messaging platform from the founder's perspective? Are you being more fair to employees? Are you being more fair to founders because they are your clients?
Yeah, so it's a great question. We don't tend to think of this as a founder or the employees. We tend to think of the business as the customer. The business succeeds, all the stakeholders in the business succeed. So our client is the company. It's not a founder, it's not the employees. Now, what it takes to succeed in designing a plan has to fit purpose, right? Yeah. The same equity compensation plan or same ESOP plan will not work for all different companies because the stage is different, the growth trajectory is different, the talent needs are different, how performance needs to be rewarded is different, the pressure to retain talent can be different based on competition. Therefore, it's really important to have the right plan for you. So we do not actually say we are founder centric, we are employee centric. What works for business should technically work for all, because each one of these people you mentioned are stakeholders in the business. Finally, what does it take for the business to succeed? Which means, what is an incentive plan, or what is a compensation plan, or what is an ownership structure that works for the business? If it works for the business, it works for everyone, investors included, and board included. And so that's how it works for large companies. So why should the principle be different for younger companies? The principle is the same. So we don't tend to think of this as easy. Now we evangelize best practices. That's a separate matter. So we create tools for the founder to give to town halls to explain their equity, because communication is everything. The founder thinks this is a chunk of the company that we are giving away, but if employees don't appreciate it, the purpose is lost. Right. And so it's really important to communicate. And so we create the tools to communicate. But it is the company's plan. It is the company's objective. And if it works for company, it should work for. How can something work for the employee and not work for the company? So we don't tend to take a view. And this is a nuance to all of these. It's like a compensation discussion or a remuneration or a salary discussion. Employee and company are on two sides of the table. But yet they are aligned. They're in the same boat. So you need to appreciate that difference and communicate that and explain how equity works. And once that is explained, there is immense value. This ultimately, it has to align stakeholders. The ownership plan has to align stakeholders. What we provide is the infrastructure. Yes, because we are in the industry and we see so many different successful cases, we give benchmarks, we give best practices, we give the best available tools. But finally, it's the company's objective that needs to get served.
Understood. I think that sort of we are trying to understand more about Qapita and dwelling sort of deeper into this. I'm trying to understand more from you that will people consider Qapita as just as a software company, infrastructure provider? Does that your work stop there? Or do you also handle queries, which I'm also understanding a lot of employees would have that, especially in private markets? How do you define valuation from A to B? What is the price of my stock right now? So is Qapita should only be relegated as a software platform which HR uses?
Yeah, so good question. Again, it's a nuanced answer, so I'll try to give you as detail as possible. We built all the tools to communicate anything that can be communicated, including price, real time, and so on. But again, it has to serve the company's objective. So we would put the company at the center of everything and then communicate. Do we have support for employees? We have close to 600,000, somewhere between 550,000 to 6 lakh employees actually accessing the platform. We do provide support desk, they can ask queries and so on, but it would all be answered through the company's lens. It's not direct. So we don't directly engage with the employee of a company, we engage through the company and address any queries they have. And that ensures this, fundamentally, this ownership has been created, this shared ownership has been created to drive alignment, and therefore we need to drive that alignment. So it is, we think of company as the customer, founders, investors, employees as participants or stakeholders in ownership of the company, and therefore it is through the company's lens. But do we actually provide services where people log in, understand more? Yes, there's several tools built. It is customizable for every company. You can create a dashboard, communication you want. We actually help companies organize town halls. There's a case study that's really close to me. A traditional company, steel and cement industry, wanted to give stock options to all their employees. Our team actually traveled to all their factories to explain frontline workers how equity compensation works, what happens when you exercise, what happens when shares hit your account. So there's all of that is meaningful work, but it's done through the company's lens. We won't directly approach the employees. But as is to answer your question, yes, there is enough provided for employees. So clarity, transparency around, everyone knows, everyone, equity is important to everyone in this equation, but no one sees it.
Yeah.
And we enable them to see it. And when I say see it, it's really see it transparently.
Visualize it.
Visualize it, see it, understand it.
Yeah.
Take decisions based on it. And for many people, if this really translates into value, substantial portion of wealth creation will happen from this. So it is a meaningful thing to pay attention to.
This is the point exactly I wanted to come across in this conversation, that you are not to be understood just as a passive infrastructure sort of software sitting somewhere in the organization. You do communicate, you do provide insights, you do sort of do this kind of communication with the employee members. There's education, there's basically providing awareness on what this really is, right? So you have all those tools embedded in your software product also.
Yeah, it's software and then there's a service layer on top. So it's not just the software, and enabling, providing that solution to the companies. Anything, any new instrument, if this is an instrument of shared ownership, it's only as good as it's understood. So we provide all the tools so it's understood well. And that kind of, if you think about this is you start with employee ownership, like ESOP ownership in a private company. Then it becomes a late stage private company with some liquidity programs or buyback programs. So some wealth gets created. Then IPO happens. Then you become a brokerage customer. Then you continue to get ESOPs and RSUs post IPO, and substantial portion of your employee wealth creation happens through equity, and so wealth gets created. So if you think of an individual journey, it starts with ESOP, it compounds into some amount of limited liquidity windows and wealth creation, then continuous liquidity and wealth creation, and then becomes financial planning, wellness, and wealth ultimately. So that's an individual's journey in this. The company's journey is different post IPO. How do you incentivize at different stages of growth? But this is the individual's journey, and so we'll make a meaningful difference there from an employee's perspective.
Understood. So now just sort of stepping back from, we understood sort of what role you provide from a company's perspective, that you said that Shrija, we think about business and there are various participants, right? Employees, founders, investors, and the alignment has to work for all. Fair enough, we understand that point. Now, if I were to get into your shoes, the founder's mindset, building Qapita, you are somebody who actually gets into the life cycle of a young person joining a company, having created meaningful wealth for himself, his family, touch wood if everything goes right. So from 0 to about 100 CR, pretty much you are there.
And beyond sometimes.
And beyond sometime. That's a pretty meaningful quantum of wealth that we are talking about in a construct of an economy like ours. So do you also have plans, if I were you, sort of also expose myself to different kind of, say, vendors or partners at different stages, right? So once you have created this mini kind of wealth creator through the company, you can also provide that data or work with, say, a wealth management firm or a brokerage firm. So do you have those kind of opportunities also embedded in Qapita?
Yeah, it's in the works. So we've already, for the US market, where we are a small entrant in what's a well, we've already partnered with a large globally top 10 financial institution who also led our last round. We are working on partnerships in the Indian market as well. Like I said, today's ESOP holder is tomorrow's brokerage customer, day after tomorrow is a wealth customer.
Absolutely.
And therefore, how do we work with partners to ensure that that journey is complete? Part of this equation where it leads to stock-based compensation or employee equity or equity-based, we'll build ourselves, but the tools and all of that, and part of how the delivery happens in the broader wealth construct may happen with partners. So that is in the works, and that's how the industry will evolve. The industry is a little bit ahead in the US, given the entire Silicon Valley phenomenon happened a few decades before India became the third largest ecosystem. But this journey will be similar here, and this will be critical to the ownership of companies, and how ownership creates alignment. Wealth will be similar, and so that is part of how we see this business evolving. So there are three orthogonal axes. I just want to kind of clarify. One is the wealth axis, which is an ESOP management brokerage. Wealth. Second is what just happens in the private market stage, because time to IPO is 12, 14, 15 years to a meaningful IPO. It's becoming longer and longer, and so company stays in private. But if you're a company, you've joined an early stage company, you don't have liquidity windows, you can't wait for 15 years.
True.
Life happens in 15 years for an employee, and therefore you need to create liquidity windows for both employees, investors even. So a 15-year window is beyond investment cycles, which are typically 8 to 10 years, and for a venture fund. Therefore you need to create liquidity windows even while you're private. So there is that axis, which I call the private capital markets infrastructure axis. And then ownership in the private markets can happen at a cascaded level, which is what is a cap table to a company is an LP table to a fund. So these are three axes in which Qapita will grow. We'll take baby steps and work with partners. Some we will build ourselves, some will partner. So that's basically how this becomes a very large business.
Interesting. So the wealth management piece, I'm understanding that pretty much will have an external partner. We can look at that, right? The second piece that you spoke about, that Shrija, this entire thing of the cap table, it can also be very meaningful to a private equity fund, like an LP investing into private equity. So are you building out that practice? Tell us a little more about that.
Yeah, so we are. Every time we've solved a problem, hit some kind of scale, we've identified a new area to grow, and this is a logical step in terms of building a solution for fund. And so that has been launched. It's in the works. The difference is we've started building that later than the cap table. We live in an AI native world, so that will start AI native, whereas the cap table and equity management product is getting molded into a AI native product. So the fund admin product has been built AI native way, and so this kind of cascades, the ownership cascades in the private market. So this will cascade between this will interface, or this will overlap it's an overlap if you think of it as a Venn diagram between ownership and private market infrastructures.
Clearly, I can understand the three levers. I can clearly visualize the Venn diagram and basically the overlaps. I could clearly get that. The second piece that you spoke about, Shreya, the private capital piece, because companies are staying private much and much longer. The road to IPO, the path to profitability is getting sort of much enhanced and longer for a lot of companies. So do you also provide for, say, a secondary market exit when employees themselves can sell ESOP amongst each other? I think from a regulation perspective, it's not really allowed in India.
Yeah.
Yeah.
So three things. So first thing is what makes this domain complex is it involves three sets of laws in any jurisdiction. One is company formation law, what happens when you form companies. Second is tax. Third is securities law.
Yeah.
Tax, because employees have to pay tax when you exercise. Because of these three, it's specific to every market. And the stage and state of regulation in each of these markets is different. So it's different in Singapore, it's different in India, it's different in the US. And so it needs to be configurable and so on. And to add to the complexity, today if you're building a company and that's across international markets, you'll have employees. So two laws may be applicable in one jurisdiction, and the third one, which is taxation, may be applicable in another jurisdiction because employees based in a different tax jurisdiction. So the complexity around this tends to increase as companies become larger, growth, multiple markets, and so on. And so to answer your question, the simplest we start is with building a liquidity program software.
Like a buyback
program software. This is called buyback programs in India. It's called tender programs in the US. Concept is the same. The programs can be company funded, can be third party funded. When it's third party funded, it involves a transaction in the shares, and therefore regulation comes into play. And so SEC or SEBI doesn't regulate unlisted stocks just yet, and in Singapore MAS regulates it, so it tends to be in the regulated area. So we'll start with building the tools, the software tools. And then we will either partner or where we can take licenses and solve for this problem. It's a very large problem. It's unsolved for. It's not a simple solution, but it needs to be solved for. Public markets have all this infrastructure.
It's a huge secondary market there, right? I don't see a reason there shouldn't be a secondary market for this, right? The private ownership.
There should be. There are complexities involved.
Legal
Two main complexities for any market. First is pricing transparency and information asymmetry. Both are large problems and complex problems. Actually, we can go on for hours discussing the problem, but these are complex problems not solved globally, including the most developed market there is, the US, and not solved fully in China. So we will get there, but incremental steps need to be taken because now the private markets are comparable in size to the public markets.
Yeah. We just discussed a great idea in this podcast right now,
Absolutely.
which could be a great startup in itself.
Absolutely. I mean, there will be multiple startups in this space. It's not just one.
Sure. So talking about the product where we've understood it clearly, there's complete clarity on it. Now, I think I want to sort of talk a little on your growth levers. You said that, Shrija, we are an AI-dominated world, and some of your existing products will have a more AI-facing so-called extension or AI version of it, and some are building AI native, AI-first kind of sort of thought process. Tell us a little about this. That is AI a friend or an enemy for you? How do you see AI as a disruptor for your field and product particularly?
Yeah, I mean, fundamentally, the school of thought that where I come from is that every software, there won't be a standalone software company. It will have to be AI native to survive let's say the next decade or the next couple of decades. So AI will become inherent. It will be like internet. So today you don't really call something an internet company. Every bank operates on the internet. Every business operates on the internet. So it will be similar. So that is first. And specifically for enterprise software or software businesses like ours, the only way the software will operate is in an AI native way. So we come from that school of thought, which fundamentally means that whatever we build from here on will ensure it's AI native. Whatever we've already built will be also AI native in future. There are two nuances here. There is software and there's the services element on top of software. Actually, where the biggest disruption from AI or biggest opportunity from AI, depending on how
Which
you're
lens
looking
you
at which
see.
lens you're seeing it, will happen in that layer. And that's very relevant to us because our business, like I mentioned, is not just a software. It's all the service overlay that happens on top of that core software that manages ownership. And so that's how we are building it. There are two, now with AI itself, you can change how people experience the software, how people use, how people get the service delivery. That's all one layer. Fundamentally, we are a financial system of record, which means it's like your bank account. I can't be approximately right about the stock options you have. So anything that's written into the system of record should be as accurate as your bank account.
True.
And therefore, it has to be mathematical. There has to be a math path, like the easiest way to describe. And so we are also innovating on how writing happens into these systems with leveraging LLM, but not LLM directly writing into. And fund admin tends to be even more service intensive than
True.
equity admin. And so that's where you will see big changes, big moves from us, and that's all in the works.
But tell me one thing, Ravi, that what really is your competitive advantage? I mean, are there like lines to sort of enter the business, are not necessarily those which are like people can enter this business, right? I mean, the barriers to entry are not necessarily very high. So what really you think can be your competitive
Actually,
advantage?
the only competitive advantage is trust and how you win customers' trust.
Interesting. So, in terms of your competitive advantage, what is the kind of pool of people or data clientele that you're sitting on?
Yeah, so we don't leverage and sell client data to anyone. Client data has to be 100% confidential with us, but how we deliver insights to customers based on the data is how we differentiate. So that's the data mode. So the data sits on our platform is a system of record, but how the customer uses, leverages, makes decisions based on the data is how we differentiate yourself. Like when do you refresh your stock option plan? You have been in the business for 16 years. Now it's year 16, year 17. Do you need to refresh your stock option plan, or the current plan works? Those are decisions large listed companies also make based on the data they have on our platform. And
Those insights are thrown to them.
Yeah, the insights are shown, reports are delivered, and that is a continuous thing. So there is that piece of data. But the second is how the three types of DNA you need to build this business effectively. First is you need the software and tech capability, AI, software, what have you. Second is the taxation accounting piece. Third DNA I need in my team is the capital markets DNA for the liquidity programs, private market infrastructure. If you have all of these three DNA in the team, you can build this. So that's how we're building the talent pool. So it's not, so you will see people coming in from banks, you will see people coming in from accounting firms and Big Four and accounting and tax and domain expertise, and you need the engineers who can come from the engineering companies. Yeah. It's a combination that makes us deliver the product, and that's how we will continue to build. That's how we started from day one. That's the founding team, the three of us.
Yeah.
My co-founder is a technologist who still writes code, who's a CTO. Second co-founder is a chartered accountant and MBA who actually understands that world, and then I come from the banking background and I understand cap tables. So that's how the founding team came together. That's how we built the team.
I see that you are a perfect sort of buy for, say, a large bank. If you were to sort of give me global comparables, where organizations like yours have been swapped by, say, large banking or financial institutions like the Morgan Stanleys of the world, because you provide a lot of fitment to some of these organizations.
Yeah.
So what would those really be?
Yeah, so it's interesting you say this. In fact, the genesis of this, I was an M&A banker by profession. So when I started, our global competitor had raised a large round from a very large bank and a VC firm. Morgan Stanley has bought 2 or 3 businesses in this space. JP Morgan has bought one. It's likely to happen in India, and we are building a global business anyway, so we would fit.
Talking about your evolution and growth, and I think we have covered quite a bit. In that journey, do you think any role a VC firm like, say, in Endiya Partners has played? Because what you're building is trust as infrastructure.
every aspect of where it is, where the company uses. What I said are the the step changes in a company's journey. A VC firm is involved. So first is we get customer lens from a VC firm. If you talk about a fund admin product, the VC is actually the customer as well. So there is the whole customer, understanding the customer universe bit. But that's not where you get the most value. At least I have not got most value from my VC partners. Where we have got more value is just making sure our blind spots are covered. Like, it's no one knows everything. Everyone has their own lens. Everyone has their blind spots. I'm looking here, facing this. I don't know what's happening there. That happens in the company building journey. And sometimes you need people who are saying, hey, I don't think you're thinking enough about this. I don't think. That's why we have boards. That's why we have investors. That's why you have platforms. And the closer that equation is, closer someone is saying, you need to pay attention to this matter, you make less mistakes. I think the reality is we all make, I would have made hundreds of mistakes. My co-founders would have made hundreds of mistakes. If we make less mistakes, then others will be a little bit more successful. So how do you ensure that those blind spots are covered? That's where real value comes from VCs and boards. That's my view. We have an added layer of the customer lens given our business model, which is not boring, by the way.
I'm sure it is not, and I don't mean it boring in that way. Yes. Now it's time for the rapid fire, and I have to put you on the hot seat, right?
Okay, I wasn't prepared for, but I'll give it my best shot.
Yeah, you have to give like as short answers as possible, maybe like one word answers. If you were to give me like the highest moment in your career till now, what would that really be?
It's when we got a big validation from a large customer in a market we were in present, which was the US.
Okay, the lowest?
Lowest when some of my most favorite employees tendered their resignation.
Okay. Which is one company which you're overawed with right now?
Which is a company I'm awed by right now. I have to say it's Anthropic. I'm using it daily, and we are enterprise-wide Anthropic, so no two ways about it. I'm just awed by how quickly, how rapidly it's penetrated into everyone's lives.
What does it really mean to you, since you're in the journey of wealth creation, or one person to be a trillionaire in this world? What does it really mean?
Actually, what got lost in that headline is we've done a segment of how much wealth creation happened at employees of SpaceX. So I'm really much more excited about how much wealth creation happened at employees. What is the strike prices at which options were issued? So in the whole SpaceX IPO, there's Elon Musk trillionaire that gets the headlines. That's all fine, and part of it is also like how big the company has become, what the scale of the problem he chose to solve. But what was really exciting when the prospectus got filed for me and for my team is how much employee wealth creation happened in that journey, and what's the scale of wealth creation, and what can happen in another market, let's say India, if companies like that get created here, what happens at IPOs. So I'm always looking at it with that lens. So when a Freshworks IPO'd, that's how we looked at it, how many crore-pratis got created in India. When SpaceX, for me, the entire focus was on, okay, now we have some more data which was not earlier in the public domain. Let's see how many people got employed. So what gets lost is many people's lives would have changed at that IPO.
Okay, my last question to you, Ravi, is that what will be your message to founders building companies? How should they use ESOP as a tool? Should they weaponize this, or should they really use it as a tool for retaining talent and for equitable distribution of wealth? I don't know how many founders are really focusing on the word equitable. I still see a disproportionate amount of wealth distribution still happening at the founder level or leadership team level. What will be your one resounding message to founders?
See, when our mission is unlocking the power of ownership, which means ownership has to be transparent, has to be fair. Fair is not equal. So equitable, I define it that way. It has to be transparent. It has to be fair, and it has to make a meaningful difference when the outcomes are right. I think as long as that equation is understood, it then, in some ways our mission is served. If that, if that is executed well, this will be the single largest distributed creation of wealth that will happen in any growing economy, including ours. And so I'm quite excited for that. When I say ours, I mean the Indian ecosystem, which is already the third largest from a startup ecosystem perspective. So I'm super excited, and I also told you how much more room there is to grow. So
Thanks. Lovely having you. And what a great conversation. We just traversed this so beautifully. I didn't even realize that we're just in a room right now.
thanks for having me on the podcast. It's been a pleasure.
Thank you. So we just heard from the founder, and now it is time for the investor. Anvesh, we were talking about Qapita, and we had a pretty meaningful conversation with the CEO and co-founder Ravi, and he had extremely sort of nice things to say about you also. But let me sort of begin by asking you that what is your understanding about the vision of Qapita? Of course, as from a media fraternity, we understand that began as a cap management platform to where it is right now. But in terms of your understanding and having spent time with Ravi and the team, how big can this really become?
So I think for us, even with our first check, we were never backing a software company or a tool that just manages cap tables, right? I think from day one, Ravi, Lakshman, and Vamsi, their vision has always been to build private market infrastructure. It's not about just being a system of record, it's about what that enables, always from day one. That was a vision of the founders, right? So that's what really drew us to back the team and the vision. So Qapita for us has always been about backing a platform that's trying to build the infrastructure that will power private markets. So if you look at public markets today, everyone takes for granted the way the electronification of the markets has happened, the fact that you can have an app and you can discover price and availability and trade in seconds, but that doesn't exist for private markets today. And we had to start somewhere, and the starting point was becoming the system of record. To become the system of record, you have to know who owns what, how many shares, and that's where cap table management comes into picture. But the complexity as companies scale, and you start off as a small private company, and then you scale and you go all the way to becoming a publicly listed company. That complexity becomes exponential, right? So you have to build true infrastructure, not just a tool. And that's what sort of led us to back Ravi's vision from the very beginning.
What were the sort of specific interventions that you think the India team really did to get them to where it is right now? Where were the sort of the detours from the vision, if you think?
Yeah, I mean, I wouldn't call it interventions per se. I would say it's more of strategic guidance, right? Because, we have, alongside India, there's a lot of other investors on the cap table as well. And, things that are out of your control. There are competitors who will try to throw money at the problem. There are people who sort of new entrants emerge as well. So just a few examples I would say is interventions per se, but sort of morphing the company's vision based on the need of the hour, and also how do we then, are we scaling too aggressively, right? Is it something, do we want to get into managing private companies sort of cap tables and ESOP programs right now? But we never had any questions around the founders' capabilities, right? There was never really a doubt in our mind. It's just that when you take on operationally complex aspects of building a company, I think it's just about, are we at the stage where we can handle that? But yeah, they've always been up to the challenge, and I think that's sort of, I would say, times when we needed to thrash it out in a board meeting, for example. Like they acquired a company in the US recently as well. So are we ready for the US market? Do we have what it takes to build US GTM capabilities? Those are the questions that we pose to the founders and the team, and we always have that debate and sort of ultimately arrive at a consensus and a conclusion. Yeah, I would say that's sort of always been the case with us. Yeah.
Great. So I think the company has also had various inflection points, and accordingly, the goalpost of the company has changed from a vision perspective, from cap management to equity to now public sort of market management, and they're also getting into a product to basically, or what is to a PE fund from private equity product there that they're building. So, and also we are talking in the world of AI, artificial intelligence. So post 2026, according to you, what should there be the vision goalpost for Qapita?
I don't think the vision really changes, right? So AI is here and it's here to stay, and it'll make the company more efficient with how they manage human resources and human capital within the company, right? You can do more with less today. And that's, I think, going to be the same thing that Capita is going to focus on going forward, right? So how do we build at scale? How do we build faster with publicly listed company, for example, is going to be okay with anything below 100% accuracy, right?
Yeah.
So, yeah.
Okay. My last question to you in terms of the growth trajectory for Qapita, how big can it be as an outcome for India partners? I mean, in terms of global comparables, we see large banks and financial institutions really partnering with companies like this. Is that sort of looks like a more probable trajectory for a company like Qapita?
The opportunity is massive, right? It's a global opportunity. Capital management is sort of a universal solution, for example, right? Anything in the private markets infrastructure that you build is not limited to any one jurisdiction. So with that said, I think the opportunity, I can't really put a dollar term to where this can potentially head, but it is a global and it is a massive opportunity. It's not going to be one where winner takes all, right? There's always going to be a few players that will operate. As you rightly pointed out, large global banks are partnering with some companies in this space. And I think Capita also, as you're aware, like Charles Schwab recently invested in the company and they're a financial major, global financial major as well. So yes, I think that could be one way for the opportunity to scale. Will I say that's the only way? Probably not. But that brings a lot of distribution capabilities, right? So these large financial institutions have large customers of their own, and by partnering with these solutions, they can then take these solutions to their customer base as well. That's one aspect. But given the longer term vision of the company, when you're building private markets infrastructure, I think it's not going to be any one partner that sort of really helps you achieve that vision or that scale. I think it's depending on what you're going to do ultimately. I think there's a variety of partners that you will end up working with, right? So for fund administration, it's a slightly different partnership opportunities. By automating corporate secretarial services, that's a different partnership opportunity. For companies that are graduating from private to public, that offers the banks the biggest opportunity, right? Wealth management solutions, right? And then when you are looking at fund admin, as I mentioned, it's a slightly different opportunity, and so on and so forth, right? But as you unlock secondary liquidity,
Yeah.
right, that becomes a different. You need market makers, you need liquidity providers, you need someone to be there as market participants. So yeah, the ecosystem evolves as you scale and as you meaningfully sort of progress along the vision. So yeah, I think there are multiple opportunities, and I think it's exciting to see how and where this company goes. Yeah.
So Anvesh, if you were to give like 3 or 4 key areas of growth from the board perspective for Qapita, what would those really be?
So I think Capita, as we mentioned, I'm sure Ravi has also spoken about this, is expanding meaningfully beyond cap table management. So there are multiple growth levers. One is market expansion. So they were largely Asia focused, Southeast Asia and India focused. Today they've gone after the US market as well, where there's meaningful room for them to scale. So a large part of the growth in the more sort of near future will come from market expansion. And there are product expansion opportunities that we're looking at as well. So it's scaled from cap table and ESOP management to now into fund admin as well. So I think there's definitely growth that's going to come from the fund admin side of things. And the third growth lever, I would say, is continued product expansion, right? So once you start that ecosystem, you're also building that sort of private market infrastructure, which we keep harping on about. But that's where you're building truly sort of that secondaries marketplace, secondaries exchange sort of a product, right? So we're at sort of phase one, but the ultimate goal is to build what we see today for public markets as private market infrastructure as well. So how do you enable seamless price discovery? How do you enable seamless liquidity for private markets as well? I think, and that can start in multiple ways. You already have a secondaries marketplace today. There are ways to create financial products around that can be more accessible to HNIs and general public, right? Not just institutions at the end of the day. And beyond that, I think, you truly become sort of an exchange where people can seamlessly transact. Growth paths that I see for the company going forward.
Okay, that's sort of a massive opportunity that we're talking about, really, that is in the public markets. So it's a kind of a new operating system, practically, that we're talking about for private markets that is already existing in the public markets. Okay, my last question to you, Anvesh. One piece of caution or advice for the founders at Qapita or the leadership team, what would that really be?
That's a tough question, right? Because I love the team. I have known them for so long and they're all great people. But I think caution or piece of advice would be don't stretch yourself too thin, right? I would say prioritize focus areas. So I know it's always exciting to have many different avenues that you can potentially grow in, I think. But for us, it's always about, okay, how do we, put some conditions or barriers and say, okay, let's just prioritize, okay, let's do, these areas of focus first and then let's move on to the next, right? So that's always been, I think, my advice to the founders, and I'll continue to give the same advice.
Thank you, Anvesh.
Yeah.
Thank you for joining us today in Bangalore. Thank you.
My pleasure. Thank you.
So, we get a ringside view of Qapita, a company born out of one of the startup ecosystem's most overlooked challenges, ownership. For years, cap tables, ESOPs, and shareholder records were managed across spreadsheets and paperwork, making equity increasingly difficult to manage as companies scaled. But administration was only part of the problem. At its core, equity is about trust. It is what aligns founders, employees, and investors around a shared vision. Qapita recognized that managing ownership was not just about digitizing processes, it was about building the infrastructure for modern private markets. A platform where founders can manage equity with confidence, employees can understand the value of their ownership, and investors have greater transparency. Backed by investors like Endiya partners, Qapita is helping build a startup ecosystem where growth is powered by trust, transparency, and good governance. Because every great company is built by people, and when everyone owns a part of the journey, everyone is invested in building something that lasts.
Endiya Partners, the co-founder VC for entrepreneurs building world-class product startups, empowering visionary founders to build transformative companies.